Okay, market's trying to break out of the failed low 2 and get 2 legs up, but the breakout on 46, 47, 48 is weak. So to me, I think that this is still going to be a two-legged rally, which means it's going to have a pullback before it goes very far. So that means I should be looking for a short, expecting a pullback. Bear inside bar, but the channel up from 43 is pretty good, so I wouldn't short. 50, I think that's a good-looking breakout pullback trap, so I think it's an okay short. The high one is so weak at this point that I don't think there's much upside here, so this is a good situation, I think, for shorting and scaling in higher. You got the lower high at 52, but it's going sideways in here, so we may go sideways some more. I don't think that's a good-looking short. It went down 5 ticks and formed a high 2 at 54. I wouldn't buy the high 2. If anything, I would sell above. I think we should go down for a pullback and then have a second leg up. 57, a common situation, 2-bar reversal where the bear bar is 1 tick above the bottom of the bull bar, so that's often a bear trap. So if anything, I would buy down there, but since I'm expecting a pullback, in this case, I wouldn't buy. I expect the market to go lower, but I would not sell there either. 58, arguably a high 2, breakout pullback. To me, the market's been going up for an hour or two, and it's in a trading range. We're near the top of the trading range. I think I'm only interested in looking for shorts. When the market does sell off, then I'll look for buys for a second leg up after the wedge bull flag. Okay, I think 57, 58 is it's a pair of decent-looking bear bars. You still have the 2-bar reversal, 56, 57, and the entry is below 56. And now you have 2 bear bars, 57, 58. I think shorting below them, when you're looking for a short, I think that's a good reason to go short. I would only scalp because I'm expecting a second leg up from the wedge bottom. Big tail, bear inside bar, 63. Bull inside bar, 64. I think this is tricky. I think the market's going to have the second leg up. I think it's probably okay to buy here. Good risk-reward ratio. The market should try to get up to the 25 high. At a minimum, it should get to the open. I'm not looking to short at this point. The market's working higher, 66, 67, 68, pausing, 70, 3 little doji bars. I'm not buying up here, although the market should break out and at least test the 25 high at 88, and there's room for a scalp up there. This was, I think, kind of frustrating. You got the breakout on 71, which I would not buy because it didn't look strong, and the follow-through was weak on 72. But you've had trending highs, lows, and closes for about 7 or 8 bars, so it makes it tough to short the failed breakout below 72. But the market didn't care. You can view 72, 73 as a 2-bar reversal, but the market just sold off hard into the close, trying to bounce a little bit into the close. Chances are we're going to have more up because we're in a bull trend. A bull channel is a bull trend. The channel has been going on for a long time, so at some point or any point it could reverse down quickly. On the daily chart, we're above that measured move target from that gap, and I think that was a pretty reliable looking measured move target, so the market, the bulls might be starting to take profits in here. Let me see where that high is. Okay, we did not go above here. In any case, to me, I wouldn't be buying at the top of anything. I would only be buying below the lows of bars and pretty much near the bottom of the channel. So somewhere, if I were looking to buy, I would be buying near a best fit bottom of the channel. And if I were looking to short, I'd be shorting above the highs of bars. It's a game of musical chairs, and right now the music is every time it sells off, it gets bought. But one of these times the music will stop and it will sell off and it won't get bought and it'll fall down pretty far. One thing that's supportive of the bulls is the moving average has been going up for 2 months now, and it's fairly steep. You can see what happened back in March and April. 2 months of a steep moving average. It took some sideways action before the market could go down. So will we do that? I don't know, but even if we go down sharply, there probably will be a pullback to the moving average because it's so steep. I still look at this September-October rally and compare it to what we had in March and April. The bars are overlapping more, the tails are more prominent, the size and number of the bull bodies is less, that they are less prominent. So I think of this rally as weaker than the March-April rally, and that had a horrendous sell-off. Chances of us getting another crash like we had in May are small, but it is possible. And I do think that when we sell off, we could have a fairly quick sell-off, 40 or 50 points over 2 or 3 days. It's fascinating to me to watch fast money, and everybody is uniformly bullish. It's really unbelievable that everybody is so bullish. They're bullish on everything. It's really fascinating to me. So you have to wonder who's left to buy if everyone is so bullish. But as you know, I think that we're probably getting near the end of the channel. The bull channel in the 60 minutes started in September, and the swings are starting to get bigger up in here. So the two-sided trading is getting more prominent. We've been in a trading range for 2 or 3 weeks. We're at the top of the range. So the odds are it's going to trade down to the bottom. From a directional probability perspective, the bottom of the range is 20 points down. So what are the odds of the market going down 20 points from here before it goes up 20 points? I would say 60%. In general, if you're at the top of a trading range, 60% chance that the market's going to try to trade down. If you're at the bottom of a trading range, 60% chance it's going to try to trade up. So right now, from a probability standpoint, I think there's a 60% chance that the market goes down 20 points before it goes up 20 points, and 40% chance that it goes up 20 before it goes down 20. And with that math, I'd rather have at least something on the short side.